Bitcoin's meteoric rise from $3,000 all the way up to almost $60,000 captivated the world. But its recent fall all the way down to 43,000 has left everybody confused and wondering, how much lower could we possibly go? Should you be buying more now, or should you wait for us to go even lower? There's a lot of narratives out there, but in today's video, this is what they're not telling you. Welcome in, everybody. My name is Steve. This is where you're going to come to have more success in crypto. So go hit that subscribe button right now. Go hit that button right now. Join the movement. Hit the thumbs up button. We're jumping straight into the video. I just want to say one quick sentence. The seats sold out as of last Saturday. Congratulations to everybody that locked in their seats to our courses. Congratulations. Let's jump in. We're going to start and we're going to break it down into 3 sections in today's video. 3 reasons as to why we're seeing this type of movement in the markets. Once you understand these 3 sections, you're going to better understand what you should be doing right now. Because your biggest question right now is probably, hey, should I be buying more Bitcoin now? Should I wait? Are we going to drop lower? How much lower? What is going on? And again, this video is what they're not telling you. So we're going to start out with this chart. Those of you that follow my channel, we're well prepared for this dump. We were well prepared. We covered it at length in multiple videos, so it's no surprise to us. However, let's break it down in a simple way. In case you missed those videos, you can go back and watch last week's video. But we basically have the Bitcoin Investor Tool, right? The Bitcoin Investor Tool has this red line at the top. Historically, this red line has been the most critical level in holding major resistance prior to our blow off top, prior to our market cycle high. It's a major level. And when you look left, which we do on this channel, anytime that you're faced with something in the chart, you want evidence, you want data points, you look left to find, because we haven't reached this level in quite some time. It's been multiple years. We covered it the first time that we reached this level back in January. We were well prepared for a pullback as we reached this level, and that's exactly what we got. And we know that because we look left. And when you look left, you know, okay, it's been multiple years since we've come up to this level. How did we interact with it before? Well, before, as we were coming up, back in June 2017, we had a 39% correction from this level, and then followed by another 39% correction in September, followed by another 29% correction in November. All of which we're holding as resistance for this level. This level, as soon as you get above it, we often go directly to our market cycle top rather quickly. So we know that also looking at the big picture, there's many data points, and you can find this on lookintobitcoin.com. There's many data points when we approached this red level, even as far back as 2010. In November 2010, we reached this level, exactly November 13th, back when Bitcoin was 53 cents. Okay, we also reached it again in 2011 and the 2017 run. The only outliers was when we reached it during this cycle, which again, we will call this cycle 2 to keep it simple. This cycle acted differently. We had no resistance to the red line. As soon as we got through it, we went to our market cycle top rather quickly, followed by a horrific correction. So these little tidbits of information tell us so much about how we are interacting right now as we are at this level. If we take all of those data points that I just illustrated and average them out, what we did is we took all those data points, we got rid of the lowest one and the biggest one, just so we can get more concrete evidence. And if we take all of those data points and average it out, it tells us, on average, when we have resistance from this red line, we often fall 39% on average. And it generally takes 28 days to reach the bottom. So hypothetically, let's take that information and extrapolate it out to see where we would end up, right? Because that's what everyone's wondering. How low can this go? Well, based on just the facts and the charts, again, if you look at the big picture here, anytime we've been faced with this red line, we've gotten major resistance. As soon as we get above it, we have so much power and so much momentum, we often go to our market cycle top rather quickly. So let's just take that information and see where it brings us. Because so far, let's see, we've had, roughly 20, maybe 28, 20 something percent correction. Let's see, we've gone down to 43-ish. Yeah, so roughly 25, 26% correction. And again, if you missed our video last week, we prepared exactly for this. We have a concrete strategy for this that has been dominating, right? So let's see where it would bring us if we actually received our quote unquote average correction, right? This 39% correction that we're talking about that we receive on average, it brings us roughly to $35,000. Now, in terms of our market structure, that seems like kind of an odd number to go to. If you look at our market structure that's just right in front of us, that would be an interesting place to fall to, just based on the facts and the charts. But again, it tells us that on average, we would fall to potentially a 39,000. And let's see what the date is, because on average, these take 28 days to reach our market bottom. So on average, it would be March 21st at around 35K. So are we out of the ordinary right now to reach a low of 35K? No. Where we're at now, this 43K. No, we're right on schedule. And we're only a handful of days in, right? Keep in mind, we're only 5-6 days in. We need to relax, right? This is quite healthy for the market to go through this because we are at such a pivotal point, and I'm going to explain 2 other reasons why so that you can get some more information and understand this market very clearly. And then we'll get into the fundamentals of what you should be doing right now. But based on the facts and the charts, we're right on schedule. We are right on schedule, and there's no evidence in the chart that are saying there should be any concerns. There's no concerns right now, but let's dig into it a little bit further. I do want to give a shout out to the Twitters. Our Twitters is on fire. If you have the Twitters, go follow us right now at Crypto Crew U. Over on the Twitters, you can see it right here. There'll be somebody in the comments, oh my God, Steve, it's not called the Twitters. Yes, it is. They need to change it to be called the Twitters. It's very funny. We have this as an inside joke on our channel, but what's not a joke is our Twitters is on fire, and you better go follow over there. Now, let's get to the second reason why, right? There's 3 categories of reasons why we're seeing the price action we are. Once you understand those, you'll better understand what you should be doing right now. And reason number 2 is clear cut. So not only were we met with heavy resistance at our red line in the Bitcoin investor tool, the second reason is we were met with heavy resistance at our cycle, our intra-cycle high. So we had our bull flag, right? We had our pull. We've been following this chart for quite a while, weeks and weeks and weeks. And when we were around $30,000, we said, hey, I know everybody is calling for us to go lower, but we're in a bull flag, and these are very bullish. And if we break out with a confirmation, which we got here on January 30th, we have a target. Our target was 55. We made a video yesterday about how it's quite humorous that the target was actually almost to the dollar accurate. So that's reason 2. We were met with heavy resistance, and we are at our intracycle high, and we're getting rejected from that level. So if you follow our channel, you probably dominated that trade to a T. Let's get to reason number 3. Reason number 3 is something that we also covered here, and that's divergence, bearish divergence. There's bullish divergence, there's hidden divergence. We will keep it simple today and just cover bearish divergence. Bearish divergence you can see here. Again, what do we do when we find something? We say, hey, I think this is divergence. we look left. When did we do this before? What was the reaction in the market? Again, what is divergence? In the simple way, it's when price action, look here, where our cursor is on May 13th, 2019. We made a high. Then we made a higher high, and we made another higher high. At the same time, our RSI, which is down here below, was making a high and then a lower high, meaning our price action was going up, our indicator was going down. And you may think, well, doesn't this happen all the time? No, look at when price action goes down, almost always the indicator will go down. When price action goes up, the indicator will go up. You want to look for these divergences because they will tell you, they will dictate, they will foreshadow what is coming in the market. And we're going to get to a major divergence because the S&P 500 has one. We'll do a video coming up about that, and it's not just a small one, it's pretty legendary. But that's a side note. You get the divergence now, right? This is bearish divergence. Price action going up, price action high, higher high, higher high, higher high, high, lower high, lower high. Now, here's a simple rule. The divergence, the longer the time period, the stronger it is. The steeper the angle, the stronger it is. And that's what you'll see a reaction in the price action. For example, this was a relatively short divergence. It only could, from November 4th until November 20th, we're talking about 3 weeks kind of thing where we were in divergence. This one is a steeper level and a longer period of time. You can just see the rise in price is at a steeper angle. So we're seeing that play out as we speak. We covered this a few weeks ago and said, hey, watch out for this divergence that's forming. Now it's playing out. Okay, so that's kind of reason 3. So all these 3 reasons combined are what you see in the price action. But let's get to more in the meat and potatoes of what's going on here, because you want to know what you should be doing now. I also want to point out that this chart here, the fear and greed, also points out to major things that are about to happen in the market. For example, the fear and greed right now, as we speak, live is 55. We're still in greed. Right? There's still greed in the market. However, when you look at the market structure will tell you so many facts about what's happening. We know that we're at 55. We also know that this is a critical level as of January 28th. We fell to 55. The simple market structure, when you look at this, you say, okay, we formed a low at 40. Let's take a look at potentially the year chart so we can see this a little more clearly. We formed a low at 40. We had the 55 here. We had the 55 now. We also climbed back up to the 95, which has been major resistance for months and months and months. What does this structure tell us? It tells us if we don't hold 55, it's highly probable we're going to fall all the way back down to 40. If we do that, it's highly probable a move from 55 to 40 will spark some fear in the markets. There'll be a bigger drop, one that maybe catches people by surprise. So pay close attention to that. That's something, if we break this 55 and fall to 40, it's something that would be in the charts like a Bitcoin falling to probably $42,000. It'll take everybody by surprise, maybe even breaking the 40K. So we'll watch that like a hawk, right? That's why you're subscribed to the channel. A lot of what we're saying makes sense to you. Hit that subscribe button. You don't want to miss these updates that'll keep you ahead. For example, if you weren't subscribed when we warned you about this drop and then we warned you about this drop, then you missed out. That's why you're hitting the subscribe button right now so you don't miss out again. Now that we have all of the facts, now that we understand the structure, we understand these 3 components, what should you be doing now? Well, we pointed out with this chart that we could fall on average to 36,000 by March 21st, right? So that puts into the question, what should you be doing now? And again, you can watch last week's video where we pinpointed the strategy, but what I'm telling you is that no matter what happens here, this is supposed to happen. We are going to enter into our super cycle. The next phase of Bitcoin is going to be very explosive. The market's going to be moving quickly and swiftly and powerfully to the upside. So what you don't want to do is sit on your hands. What you don't want to do is wait for the absolute best pinnacle moment, in your opinion, to buy. And a lot of people, they hear this video and they say, oh, I'm going to buy at 35,000 because Steve said on average that would be the drop. You will be waiting potentially for the rest of your life for Bitcoin. I'm not saying it can't fall to 35. What I'm trying to pinpoint is this biggest mistake in crypto and in trading. And this is something that I experienced in my early days in trading, is waiting for that perfect buy. You always have a price in your mind. I'm going to buy at this price. That's where you go wrong. You have to focus on a strategy, not a price. And my students will tell you the same thing. You want to focus on a strategy, not the price. You never want to pick a price to buy or sell. You want to base it on the facts and the charts, right? So maybe you're not in Bitcoin right now and you're waiting for that perfect moment. And I shared the same philosophy with you back here when Bitcoin was at 15,000, 16,000, 17,000. And I said, it's not going to make a difference in a few months from now, whether you buy at 15,000 or 17,000. And a lot of people were struggling with that. Oh my God, I need to buy at 15, not at 17. 17 is too much. I need to wait for a drop. And they waited forever. And fast forward a few months, now you understand what I was saying. I'm giving you the same message now. Whether you buy at 44,000 or 40,000, it really is not going to make a difference in a handful of months from now, right? So that's one point I want to get across. And again, what's not being discussed is this level, this red level here that we follow on this channel. This is a major level. It's so powerful. It has so much power for its resistance, right? It's a powerful resistance level, and it's been that way for 10 years. Once we get above it, anytime in the market, once you get above a major resistance level, there's so much momentum and so much power to the upside. We often move quickly and swiftly to new all-time highs and potentially a market cycle top. So that's what we'll be looking for. One thing to really pay close attention to, which we need some more facts in the charts, is how are we going to interact with the chart once we get above this red line? Is it going to be something like this in 2013, where we had kind of a market cycle, a major correction, a cool off for months and months, and then a second wave of that? Or is it going to be more traditional, like market cycle 1 and market cycle 3? More information to come on that. I do have some more videos that I want to cover that'll really blow your mind onto this philosophy, because right now it is possible that we have this play out like a market cycle 2, but it's also possible that we have it play out like market cycle 1. One thing we keep in mind is with market cycle 2, we never had resistance with the red line. On market cycle 1 and market cycle 3, we had resistance at the red line, and that's what we're experiencing now. This is our second meeting of the red line, and you can see it clearly here on our chart. Meeting 1 was here, meeting 2 was here. So that's where we stand now. That's the way I see the charts. I do want to get into a couple other things. Make sure you go follow on the Twitters. Make sure you follow right here so you don't miss any more updates. Congratulations to everybody that got into the seats while we had the 61.8% off. Some people in the comments are like, Steve, you have online courses. How are there limited seats? That means the concept completely went over your head. Limited seats were at that price. So yes, we do have seats to sign up now, but it's at full price. So the concept of limited seats were limited for that price. So hopefully that makes sense to you now. And thank you for everybody's wishes for my son. His birthday was incredible. And I'm trying to find a balance here for filming. So one thing that is not quite clear to maybe you is if I don't have a YouTube video, maybe I'm not working. But YouTube is like such a small portion of my day that, you know, I have a team, we have a company, we're trying to change 1 million lives. I'm working 7 days a week. I've worked 7 days a week for years and years and years, 7 days a week. Christmas Day, my birthday, my son's birthday, my wife's birthday, a wedding day. I worked on the day my son was born. Every day, 7 days a week for many years. So that's my life. I'm a hustler. I've always been that way. So these YouTube videos, my schedule is so chaotic that I have these periods of time where I can film YouTube videos built into my schedule, but it's during my dinner time with my wife and son. So if I'm filming this and you see this, that means I didn't have dinner with my wife and son, which to me it's so important. So I try to do these as much as I can. I've been doing as much as I can for the past few months. So I hope you appreciate it, and I hope you respect my honesty. I'm telling you just how it is, and I would love to film more. I'm trying to find a good balance because my son and my wife need to be my number one priority. So hopefully you understand, and after my wife and son, it's my company and my team, and then it's YouTube. So hopefully that's clear. My students know. My students can reach me anytime, at any day, ever. So hopefully that is clear to everybody. But we're supposed to do one video per week. We've just been destroying the YouTubies and creating a lot of content to try to keep everybody level-headed during this emotional roller coaster, because you're probably relatively new, and you probably, every time I make a video, you really connect with what I'm saying, and we have a connection. So I'm trying to be here for you as much as I can, and hopefully that's now a little bit more clear. Peace and love to the fellow underdogs. I'll see you right back here on the next video.